Timothy L. Smith is the founder and CEO of Aurora Private Wealth Inc., a financial services firm specializing in wealth management for high net worth clients. He co-hosts the Financial Dad podcast with his daughters, focusing on financial literacy for entrepreneurs, creatives, and families. Timothy is an advocate on investment advisory fraud and is finalizing a book offering guidance on protecting investments. He has experience in public speaking and theater, including performing for 3 U.S. presidents. All right, my financially intentional people, welcome back. And today I'm joined with Tim Smith, and we're just going to talk about money like we always do. Tim is the OG in the game, and he has a lot of knowledge, and he has a podcast with his daughter. He talks about financial literacy and all of those great things. So happy to have him on the podcast to have another conversation about normalizing wealth. So welcome, Tim, to the Financially Intentional Podcast.
Thank you. And thank you for having me.
Of course. So, Tim, of course, we're going to talk about your background and what got you into the finance space.
Oh, wow. I was a child actor singer, and I like to joke that prepared me really well for a life as a financial planner and investment advisor. Set me up, exactly right. I was a child actor singer, and I was making money at it, believe it or not. And I invested the money into mutual funds, stocks, and options, which is something far more advanced than just stocks and mutual funds.
Mm-hmm.
And I was so fascinated by the investment stuff that, in part, I ultimately decided to stop being an actor and go into this business. I just found it all fascinating and met up. Some friends of mine had joined a financial planning company when they finished college, and they brought me in to meet their management, and those folks wanted to sign me up, and I just made the decision and never looked back at this point. So I've been doing this since 1985.
Wow.
I'm 40 years. When you said OG, I think that means the old guy.
Are also known as the original gangster.
Original gangster, yeah. Yeah. My kids would have known that reference in a heartbeat. But so, I've been doing it a long time, and I got my certified financial planner designation in 1989. In 1995, I left that other company. I started my own company to be an investment advisory firm. And that turned into a investment advisor broker-dealer firm. And that turned into a company with a couple of hundred financial advisors around the country, and me still working with clients, but also running the company and supporting these other advisors in their careers. And eventually I got to the point of my own kids asking me enough questions and suggesting that I should help educate young people about financial matters, that we started the Financial Dad. Technically, it was about 2 or 3 years ago, but we really launched it this past January on YouTube.
Oh, very nice.
So we are at the Financial Dad, all one word, on YouTube. And I'm having a blast with it because I'm working with my children, which is great fun and wonderful. It's a really great experience. They're far more talented than I ever gave them credit for. You know how you think so lowly of your children, right? Of your own kids. I'm just kidding. I always knew they were good kids. And I just love to read the feedback on YouTube of people saying, thank you for doing this. I never understood this before. And now I really feel like I can make a good decision, or, that kind of thing. It's very rewarding. And I'm just at the stage of life where it's really all about giving back and being grateful for the success I've had, the wonderful people I've worked with in my career. The folks I started working with when I first started, most of them have passed away at this point.
Oh.
I started working with them 40 years ago,
Yeah.
So, but that's the story. And I also just still find financial concepts very exciting and intriguing and interesting, and I love to talk about them.
I love that because you're a wealth of knowledge because you've been in the game for a long time. And I think it's important to speak to a financial planner who has seen people through every stage of their life to be able to talk about financial planning in those stages. But I
Yeah.
want to go back to you being a child actor because I think that's really important. So
Okay.
there's a lot of child actors out there that make money and their money is gone. And I know that recently there have been like if you're an official like child actor now like they have to put your parents have to put your money into a certain account, but back then I'm assuming they did not have those stipulations in place. How did you know, or how did your parents know to do that? Who taught them all of these things?
I started at 14 or 15 years old, and I already had a savings account at that
Hmm.
point. So my parents never saw my money. And it's funny that you even asked the question. It never dawned on me at that point in my life that somehow my parents should touch that money.
That is funny.
My parents weren't the ones getting on a train and going in and out of New York City by myself to audition from northern New Jersey and then working 2 or 3 days at a commercial shoot or whatever it was, getting up at 4 o'clock in the morning and getting to the city by 5:30 and working till 8:30 at night and doing it again the next couple of days. The notion that they should have had some right to something is BS from my standpoint.
I understand that, but like the level of responsibility that you had at that age is not very common. I don't know if it was common then, but it's not very common. You don't see a lot of 14-year-olds taking the initiative to go do things like that. But not only did you take the initiative to go out there and work, but you were able to take that money and grow it for yourself. But
Yeah.
but how did you know how to do that?
So the older friends of mine who had started in the investment world,
Mm,
they had an even older friend who was with a different company but was already in the investment world. And I worked with him when he was young in his career, and I learned a lot from him. His investment style was very different from what I ultimately became as a financial planner, but I generally wasn't working with 18-year-olds who could take risk.
hmm. Yeah.
When I was 22 to 27 years old, I was working with people in their 40s and 50s, sometimes 60s, who this was all the money they had in the world. And I was probably precocious.
Hmm.
I think I seemed older than I was, but people were entrusting me with their life savings. And it's more about preservation at that point than it is about high levels of growth and risk.
Hmm. Yes. Yes. You got it. You got the advice. You invested your money. And then you ultimately went into that business. So that's without any degrees. You just went ahead and got all your licensing and certification and just moved up in the industry.
Yeah, I took business classes in college because I found it really fascinating. But
Hmm.
my major was in communication, television, film production, theater.
So you graduated, you got a bachelor's degree, but you didn't do it. You got your degree and you went ahead and just did financial
Right.
planning.
I'm one of those people whose college degree has nothing to do with what they ultimately went into, basically. It does and it doesn't. My entire career is about communication.
Hmm.
So, in a sense, I went into my career, but not mass communication, interpersonal communication, and communicating in an educational fashion, I guess you might say.
So when you talk to your kids about college degrees or when you talk to your clients about it, like how do you talk to them about it? Do you think college is a waste of time or because a lot of people don't do it? Or what is your approach right now?
Yeah, I think that I'm in the camp of people who, first of all, I never thought every kid had to go to college.
Hmm.
That never would have occurred to me because I had many friends who just went to trade school or went into the service
Hmm.
or just got a job out of high school. And even though I went to a pretty good high school, it was a public high school, and you had the full spectrum of kids that were meant to go to Harvard and kids that were meant to get a job. And
Yeah.
so I'm accustomed to that. There wasn't the same pressure when I was getting ready for college or getting out of college for people to not only go to college, but to go to the best college,
Yeah.
to work themselves like dogs to try to get into the top 10 schools in the country kind of thing, which is more about ego, often of the parents, than it is the opportunities for that child. What I have seen in my life is if you want opportunity, you can find it. And your
100%.
college degree or lack thereof at a certain point is meaningless in that process.
Mm-hmm.
So nobody has to go to college, number one. Number two, I'm a believer that I actually tried to create a product for what I'm about to describe. I'm a believer that people, before they take on debt for college, should go to the Bureau of Labor Statistics site and look at what the average incomes are for people coming out of college with those careers.
Yep.
And then divide that by, let's just call it 0.06 in your little calculator, and figure out how much debt you would be able to support. Multiply that by 0.06 and see how much debt you could support when you get out of college on an average new person salary. Because this is a bad example, because one of my daughters is an actress.
Mm-hmm.
And she's the one who cost me the most for college. $200,000 for NYU in New York City, wonderful school for acting. And my daughter is a very talented actress. But it's one of the hardest careers you can possibly imagine. Only 2 or 3% of actors in the union are employed at any given time.
Mm.
And so she knew she was going into a career with no steady work prospects, if any work at all, for years. That's how difficult a career it is. So you can't even look at that and say, okay, what is 200,000 going to cost to pay off? And she's lucky that she didn't have to pay it off. So I think that that should be something that all high schools should talk to kids about.
I wish that was definitely something that was pushed when I was going to school. So I was definitely of that generation that was taught, like, you go to school, you go to the best school possible. And for my parents, it wasn't an ego thing. It was like, that's your way out of poverty. That's their way out of the hood. Like, you go to the best, you do your best in school, you go to the best school, you get that good job and you stay there and all of that kind of stuff. That's the narrative that was pushed to us. Now, what you're describing, that score that you came up with, I've heard it before. Somebody formalized it. It's a blogger called Millennial Revolution. They have a book too. And they call it a pot score. And it's basically, it just takes how much you would earn in your first couple of years in your career versus how much you would spend to get that education. And if it doesn't make sense, then you don't need to be doing that.
Right. That's where I think the gap is that sends so many kids into so much debt, because there's no relationship between the work I'm likely to get when I get out of this job, this college career, and the cost of that college career. So few people look at it that way, and I'm really glad to hear somebody has put something out there on it. It should almost be required at the end of junior year of high school.
Yeah, I think that's true. But also, I think that there's not a lot of responsibility put on these universities, because as soon as like financial aid and student loans and stuff became so prevalent, it was almost like, hey, we can charge whatever now because people can afford it. And so I think, like, of course, the responsibility needs to be on the people paying for these institutions, but also at another level, there is no bounds to how much these universities are charging. And we're not talking about that.
I can tell you, I sit on the board of a particular university in New Jersey, and they have the opposite problem. They it's a small school, maybe 1,400 students total. And they can only command so much in the marketplace. And so their population has been declining over time. And it's really forced very difficult decisions on them, and not able to give faculty the kind of raises that would keep up with inflation and things like that. So it does run both ways. There's probably some sort of a median where they're doing fine but not great. And then you have the big universities. Take state schools that have state funding.
Yeah, that part.
I mean, they don't even have to raise their own money to have students be able to afford to go there and everything. But I am also in agreement that the freer we made it to get to college, seemingly freer, we made it with more loans to get to college, the higher the price of college has risen in response to that because it stimulated demand. It's
Yeah.
pretty simple.
I want to really talk about you being a financial planner and raising your kids. How many kids do you have?
I have 3 in total.
3 all girls or
No,
3?
I have a 32-year-old girl who has a
Mm-hmm.
son,
Mm-hmm.
and I have an almost 30-year-old son, and then I have a 27-year-old daughter. And the 2
So
daughters are both involved with me in the financial
in the
dad.
pie. Nice. Okay. So 2
Yeah.
girls and a boy. I have 3 girls. And
Okay. One of whom is 6 and very
oh,
testy.
that 6-year-old is a wild one. Okay. So I have a 2-year-old, which is just wild in itself.
Oh, God bless you.
I'm in the throes. Pray for
Yeah.
me. Okay. So I had a 2-year-old, then I had a 6-year-old. Thank you. That is very witty. Let's say that.
Okay.
And then I have my 11-year-old who is transitioning to middle school. So it's fun
Middle
times in
school
my
is the
house.
worst.
And you know what? I think I know that, and I used to say that all the time. And I think from the time that she was like in kindergarten, she was preparing herself for middle school because she was like, Mommy, why are middle schoolers so crazy? Because I used to always say middle schoolers are the worst. They are. She was like, they're so crazy. I'm so scared to go to middle school. And so now she's in middle school and she is having a really, really hard time. So I partially blame myself for that. But yeah, so
Mm.
that's what's going on over here. But I just want to know, it sounds like you had really good financial acumen really early on. You had really good role models. You had people from the beginning modeling really healthy financial behaviors. How did that translate into parenting for you in raising your kids and the things that you taught them growing up?
Let me start by saying I didn't have role models in my parents about it.
Okay. Yep.
My parents were just absolutely wonderful, amazing people, but finance was not their thing.
Yeah.
And so there was always a struggle with money in my family growing up. I think it was part also of my motivation to go understand money
Mm-hmm.
because my parents struggled with it so much. But yes, as I entered young adulthood and college and young adulthood, I did find some role models. I did find people who were knowledgeable in the industry, people whose opinions I respected and their judgment and everything else. And so, of course, that was very, very helpful to me. And whether it's a financial planner or a mentor or someone, everybody can benefit. As my kids always say, everybody needs a financial dad. Everybody can benefit with some sort of mentor mentee relationship.
Mm-hmm.
And the financial dad is an attempt to create a mentor on personal finance for
Mm-hmm.
people who just never had one
Yeah.
and still don't have one and need
Mm-hmm.
somebody who understands this stuff to put it into plain English and help them understand it. I can't give advice as the financial dad. We don't have a call-in show where I say, yeah, buy bonds,
Right.
sell pork bellies, buy bonds. We're not doing that exactly. It's purely educational, not
Yeah.
advisory.
Mm-hmm.
And that's because my career in advisory, my CFP ethics preclude me from giving any advice without a full
Mm-hmm.
understanding of people's situation. But we can answer general questions, and we do get a number of general questions, and that stimulates, by the way, some of our episodes for our podcast is, oh, somebody asked a good question. What is a high yield savings account? Okay, what's a high yield savings account? Blah, 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 blah. And I'm really also fortunate because I have to do very little prep for all of this.
Mm-hmm.
My kids will say, here's the topic, Dad. We're going to talk about this today. And I'll take a minute and just collect some thoughts, some kind of like an outline in my head of
Mm-hmm.
how I would present this to somebody. And the cameras start rolling and we start going. And
I
that's it.
love it. I love it. I love it. But like in growing up and teaching your kids, like
Yeah.
what were some lessons or some things that you instilled in them to get them into adulthood?
Yeah, I'll tell you the simplest thing that we did with them when they started to either get an allowance or earn money was to suggest the one third, one third, one third piggy
Mm-hmm.
bank kind of an
Mm-hmm.
approach. Okay, take a third of the money and set it aside to give away to charity. Take a third of the money and set it aside as savings, and take a third of the money and set it aside as spending money. Use it as spending money. And we didn't tell them that the third for charity is really meant to replace the taxes you're going to have to pay one day. They probably would have stopped working if they had ever found that out. I'm giving all this away to the government for some damn roads?
Man, tell me about it.
Yeah.
I live in California, okay?
Oh, God bless you. We did things like that with them. But another thing that we did was to talk to them about it. My kids had a hard time understanding what I did for a living. What are investments? What does that mean? You invest money in stocks and bonds and things like that. What does all that mean? And they have to be of a certain age to really grasp. But we didn't shy away from the conversation. And money was, you used the word normalize earlier. Money was not taboo. It was something that you would educate them about the same as you would educate them about how to walk across the street safely. And it was just the same kind of a conversation. Oh, okay, get to the road, look both ways now, make sure there's nothing coming, and go ahead. Oh, a bank account? Sure, a bank account. You earn some money and you take it to the bank and they hold it and they give you a little bit of money in return for the money that you, in a sense, you've loaned them money. And they give you some interest on it in return for that. Then they turn around and they loan it to other people and they make more interest for themselves. And just little conversations, keeping it very simple, but not shying away from the topics, not treating it like it's something we don't talk about. I think it's a barbell thing. Both ends of the financial spectrum, there's this almost a stigma about talking about money. Rich people do not talk about money. We have so much that we don't need to discuss it, which doesn't do their children any good because it makes them reliant on advisors and sycophants around them. And then you have folks who come up in poverty, like what you described for yourself, and it's probably less or so, but similar to me. I'm sorry, probably more poverty for you than it was for me, but still not affluent by any means, you know. And there was no discussion of money because there just was no money.
What is there to talk about? It's none.
Yeah.
Yes.
We don't talk about things that don't exist. Let's talk about aliens. At least that exists. I think normalizing it, having just plain old age-appropriate conversations and educating them along the way goes a long way for them being ready to eventually begin budgeting, which seems to be about the first thing that they learn about budgeting, because if they earn money, they got to figure out what to do with it, or are they going to take on a car payment or an insurance payment or things like that. So they've got to have the ability to add up what they're making and what they think they're going to be spending and make sure there's enough to do what they need to do. And little by little, they learn additional skills. Eventually, you're going to buy a car. Eventually, you're going to rent a home. And eventually, you're going to get car insurance and renter's insurance. And so life comes in steps, and it's easier to give it to people in bite-sized chunks that go along with the steps than to give them a CFP course and have them wait 20 years to use the full scope of it.
Things are learned better in practice anyway.
Yeah.
But did you set up investment accounts for them growing up?
Yes, not that they knew about, but yes. But we helped them also set up bank accounts for themselves. And that was the first thing that I did financially when I was probably a young teenager or something like that. I honestly don't remember exactly when, but it was 50 years ago at this point, half a century ago. They didn't have banks. Back in my day, yeah, I opened up a bank account, but we opened bank accounts for each of them. But we had investment accounts for them, and we had college funding accounts for them. And I wasn't a big 529 guy in the early 1990s when my kids were being born and starting to go to college and everything. But today, I recommend it highly to a lot of people. There are other mechanisms for also saving money for college. And so I try to educate people on the full scope of what different ways there are to get there, because they all have different impact on FAFSA, the college funding, ultimately the college funding and things like that. And there are people in my field who just specialize
Yeah.
in how to save and plan so that you'll maximize financial aid when the time comes.
Strategically. Yeah. I'm actually doing a training tomorrow with somebody that just does that.
Yeah, it's a great,
Yeah.
great skill to have. I'm not deep in that part. I have enough knowledge to be dangerous of that part. But when someone says to me, yeah, I'm really worried about getting kids through college, I'm not going to be able to save enough, and then I'm worried that it'll be just knock down their financial aid and things like that. I'm like, you know what? You need to have a consult with somebody who's an expert in this area.
Yeah.
And they'll be able to guide you as to whether a 529 plan makes sense, or uniform gift to minors accounts, which have pretty much gone by the wayside at this point, or even educational IRAs, depending upon how much money you can save. There are some benefits to those, in particular, that you can invest the money how you choose. My biggest problem with 529s is just that you give up investment control, and you get your money is pooled with everybody else who's the same age, and you get all the same kind of results in general.
You're talking about like the age-based funds that they
Yeah,
have,
yeah,
the target date kind of funds that they
yep,
have. You can choose the outside funds. It's just the management
yeah.
fees a little bit.
It still funds though.
Yes,
Yeah.
exactly. Exactly.
You
Exactly.
can't, just as an example, you could buy call options on the stock market,
Right.
and if the market goes up, you make a lot more money than in a mutual fund.
You are a trader, so
Well,
you're talking about some advanced level stuff,
yeah,
and most
yeah,
their money in the market.
I know, I know. I'm just talking about other options besides mutual funds. It could be a
Yes,
stock. It could be
yes,
Google
exactly.
stock
Yeah.
or
You can't
Nvidia
do that in a
or
529. No,
right,
you cannot.
right.
You cannot. Yeah. So you mentioned that I think it's your younger daughter cost you $200,000 to go
Yep.
to theater school at NYU. How did you guys fund that?
A combination of the loans that are available and cash.
Okay. Okay. All right, cool. So the loan's on her, right?
No, no, I took the loans.
Oh,
I took on the
okay.
loans. At various times, your money's earning more than the rate of return or the rate of cost of interest with
Mm-hmm.
loans. There are times when you don't want to pull it out. You got capital gains, you've got
Yep.
whatever.
Mm-hmm. Yep. Yep.
So
Yep.
I took loans at some of the points along the way rather than paying
But
cash.
did you do like Parent Plus loans? Because I heard those are like the worst. Or did you do like different kind of loans?
I did the Parents Plus loans,
Okay.
the educational, the ones that
Mm-hmm.
were offered through student aid, basically.
Mm-hmm.
Quite frankly, it was the fastest, simplest way to finance it
Okay.
when the time was there.
I've just heard really bad nightmare stories about Parent Plus loans, but I just think you probably did it very
Well,
smartly.
I will tell you that it seemed like forever that the servicing companies kept changing. And it's just
Right. There, yes,
it's a
yes,
pain in the neck
100%.
because you got a password and now you got to learn another password and you got to set up an auto pay or whatever you got to do with it. So the servicing aspect of it's been poorly run, I think.
Mm-hmm.
But that's the government.
Mm-hmm.
I was an elected official for some years. Government is really not well run.
Well, as somebody with a bachelor's degree in public policy, I am aware.
There you go. We're preaching to the choir on each side of
Preaching
this one.
to the choir.
Yeah.
But I want to talk about the Financial Dad podcast because you say you guys talk about educational stuff and just normalizing those money conversations and things that even sometimes it surprises your kids to learn about. What are some of the like umbrella big areas where you guys focus on where you feel like there's a lot of lack of knowledge?
Honestly, the basics.
Mm-hmm.
How does a loan work? How does a mortgage work? How do you close on a house? How do you it costs so much money? How are you able to actually buy the house?
And the actual cost of the house. Yes.
Yeah, the payment afterwards, homeowners insurance, property taxes. So those kinds of things, definitely. Basic wills and trusts, basic insurance concepts. My daughter and son-in-law just had a baby last year. And so, of course, they come to me and say,
Congratulations,
Dad,
Grandpa.
thank you. So they say, Dad, should we have insurance? And the answer to which is, yeah, because I'm not taking care of this kid.
You better. You know you'll do anything for that baby. I don't know why you playing.
Anything except raise it without money. Anything you want. I did an insurance plan for them that takes into account what each of them makes on their own. Then if they both also pass away, what it would cost to raise and educate the child. And they actually chose, if I recall, they wanted to be sure there'd be enough money for the first down payment on a house to kick the child off in life as well as possible. Questions about things like that. Inflation. What is inflation? How does it work? Why does it hurt? What can you do about it? What can you do about inflation? And by the way, it's a simple answer. Not a lot. It's raise your income, reduce your expenses, or reduce your lifestyle.
And doing everything, okay? You want to get ahead. That's the answer. I mean, it's just like when you want to lose weight, okay?
Yeah. The answer is simple. Doing it is the hard part.
That part.
Yeah, those kinds of topics. By age 30, how much money should you have saved? Or I'm trying to think of, we did 10 topics over 2 days recently.
Oh my goodness.
Because we were all together in one place.
Oh, nice.
That way we could put them out every 2 weeks and have a supply in the bank, so to speak. In the can is the proper film term.
Okay.
Savings bonds, bank accounts, credit cards. If you're in credit card debt, how do you get out of it? What's the best way to get out of it? Budgeting 101. Those basic kinds of things are most of what we cover in the podcasts. We also have a series of videos that go far more in depth than the podcasts that are topical. So I think there are 4 videos just on investments. So it takes you from the basics of different investment instruments into investment strategies and goals and objectives and time horizons, and then advanced strategies, things like that. And so if they're also available on the YouTube page, if people want to delve deeper and go there. We always ask, please can subscribe. You know how it works on YouTube. But we actually started with those videos because we initially envisioned it being deeper, informationally rich content.
People don't even need to get that deep. People need
not to say anything about our society, but people don't take the time generally to get deep if they just have one question.
Yeah.
They just want that question answered. So what we did is became question oriented. Here's a question, like 3 to 8 minutes. How do we answer the question in a few minutes and give them enough information to make their own decision as to what would be best for them to do? I think we have something like, no, it's 250 videos are up, but a lot of that is promo videos.
Okay.
So I think we have something like 20 to 30 podcasts up and about 27 videos.
Okay.
So there's a pretty fair amount there.
Yeah, that's pretty cool. So give us a plug again for the podcast and where people can find you if they want to work with you.
It's thefinancialdad.com is a website. So they can find us there. Also YouTube handle at thefinancialdad. Just all one word, no spaces, no underlines or anything like that. Those are the 2 places to go and learn more about what we're doing. And my daughter's names are Bridget and Hallie.
Aww.
And Hallie Berry Smith. And by the way, they're great because they just play themselves. They're just
your kids, just the kids of the CFP, you know?
Just being kids. The short form series is called Ask Dad. They do an intro for every one of these videos. And so they say, oh, how does a bank work? Let's ask Dad. That's all they say. And I'm supposed to know that go, Dad.
Go, Dad.
Hello. Start talking. That's your job.
I love it.
But we have a lot of fun with it. And I think people can tell that there's a real chemistry between me and my kids, that we really love each other deeply. We get along great. And then I love educating them.
Yes.
I love doing this with them. And I want them to know and understand all this stuff and live happy, healthy financial lives, not just prosperous, but healthy finances.
And you know what? That's such a gift. And I hope that as I grow in my financial knowledge and my platform grows, I'm able to take my kids and they grow. I'm hoping to take my kids along with me, because it's one thing to leave them money, like you said, for them to be wealthy, but it's another thing for them to be educated. And I love that you're doing this with your daughters. And so you're definitely a role model for me.
Thank you so much. That means a lot to me. You know what? If the inheritance to your children is education and a good role model, they're wealthier than an awful lot of other kids.
They got a little bit of money too. I think they're a little bit sad, but for me, it's the education that is worth more than anything. It's priceless. So I love that you're able to do that with your daughters. And then they're also educating their peer groups and everybody else. So I think that that's an amazing platform. I am definitely going to check it out. I hope everybody else goes and checks out the Financial Dad podcast on YouTube, financialdad.com, because you get to see Tim Smith and all his fabulousness and all his brilliance and all his OG knowledge, but presented
all his old guy knowledge.
We're gonna go with original gangster.
I know. I actually had heard the phrase before, just so you know. But it was much funnier to make it into old guy than to
as an old guy. No, I'm giving you your props, okay?
Okay.
But Tim, it has been my pure pleasure. I know your daughters have a blast recording with you, because I've had such an amazing time recording with you, learn so much. But also, I just love that you get to share your financial knowledge with your kids and they actually listen to you. Okay, it gives me hope.
I love sharing it with my kids. I love sharing it with your kids. I love sharing it with all the kids. I'm very blessed and lucky to be able to do what I do.
I think so too. Thank you, Tim. It's been an honor.
Thank you.